Welcome back, investors, to Ticker Time News. I'm Adam, and here's the latest segment from the After Hours show. I do want to talk about HP next. Ticker symbol is HPQ for HP. And when you look at the chart, they did not have that great of a summer. September was pretty hard for them. They really didn't even have that October rally that a lot of companies had. They started later, about the second half of October. Then they started to rally into earnings, and then they just gapped up. There is a gapping hole right there. They were up 10.1% today. They are flat in after hours. They got to a new 52-week high of $36.21 today. So that was pretty cool. So before going in on this one, definitely want to wait for it to pull back. HP has momentum. Yes, it does. It's got some momentum for sure. Okay, HP, it's trading nicely higher after closing out fiscal year 2021 on a very strong note. Now, HP reported a sizable beat for both EPS and revenue in Q4. And remember, just like ADI, HP is reporting their Q4, closing out the year for them fiscally. Okay. So their next quarter will be Q1, where most companies, their next quarter will be Q4. So just keep that in mind. It can be confusing sometimes, but after a while, you kind of get a handle on it. All right. The computing giant also guided above estimates for its Q1 quarter. So that looks really good. HP's commercial PC segment is seeing a nice pickup in offices reopening. That's very cool. HP is shipping as much product as it can, but it is facing supply chain issues. HP's earnings have been solid because it has been reducing its fixed cost structure. That's great to see in a company. Also, it's expanding its TAM with new offerings. TAM is total addressable market. How big is the market that a company can exist in? And that can help you with your investment thesis. Their TAM with new products is both in personal systems, so new computer type models, maybe wearable devices, and then again in printing, and they're expanding their services and subscription offerings within printing. On the print side, revenue grew only 1% year over year to $4.88 billion, driven by growth in services and subscriptions, which offset an expected volume decline driven by limited supply. Like others in the industry, HP continues to operate in a supply constraint environment caused by COVID-related disruptions and broader logistics issues. However, demand for print hardware and supplies remains very strong. HP had more hardware orders in the quarter than it could fulfill. The big question is, how long will these problems last? For personal computing, HP expects component shortages and ports transit disruptions to continue for the foreseeable future. That's not a good thing. In printing, HP expects similar but more accurate, or maybe more acute challenges that kind of pop up here and there, uh, especially regarding factory disruptions and component shortages. HP expects these challenges across PS and print to persist at least halfway through 2022, the first half, that is. This is right on par with what has been forecasted by other IT hardware OEMs. Bottom line, the demand picture looks great for HP heading into fiscal year 22. as showcased by its significant backlog that it has. The reopening of offices is driving the commercial side, while those people opting for a hybrid work model are spurring higher PS units and print sales. The main negative that is HP will be dealing with is supply constraints well into 2022. Despite the component shortages, I remain fans of HP, and it's been a mainstay in my portfolio for a while, thanks to its super aggressive share buyback. It repurchased $1.75 billion in Q4, on top of a $1.5 billion in Q3. HP has a $41 billion market cap. So in just 6 months, it has bought back 8% of shares outstanding. That's some serious share buyback activity. And just in case you don't know, when a company buys back shares that are on the open market, that does help to rise or raise the price of its share. And it's a way for a company to reward investors. Instead of giving out a bigger dividend or maybe a special one-time dividend like Dick's Sporting Goods did last quarter with that $5.50 special dividend payment, they instead chose to buy back shares on the open market, and that helps to raise the price. Raise the price. Getting tongue-tied here. Of the share price. So you can't really see too much of, if I put verticals on here to mark these earnings, you can see these bounces right here. And then traders, knowing that HP was buying back their own shares, traded towards tops and then waited for it to fall for them to buy again. So, I mean, you can see this very clear down, up, down, up. That is the buyback happening, and that is people more concerned with trading around it instead of investing in it. So that's just something to point out there on the chart. Now, with HP, they do plan to repurchase at least $4 billion in fiscal year 2022. Thank you for watching this segment from the After Hours Show. If you want to watch it live, then join me on this channel every day the market is open around 5 p.m. for the latest stock market news, deep dives on your favorite ticker symbols, and most importantly, answer your questions. Make sure to click the like button and share this video with others so we can all reach financial freedom. Thank you so very much for watching, and I will see you in the next video.